Hi, I'm Tony Edward. I'm the author of the book Rethinking Crypto and the host of the Thinking Crypto podcast. And you are watching Taking Stock.
Serious sneakers for this, Joe.
2 minutes to go here into the closing bell. Another round of all-time highs, both for the tech-heavy NASDAQ as well as the benchmark index of all benchmark indexes, the great S&P 500. The president saying the ceasefire with Iran is on, in his words, quote, massive life support right now, and yet investors shaking off any and all geopolitical fears. Peter Tuchman, the Einstein of Wall Street, kicks us now to kick off the broadcast today. I mean, it seems like all the concerns over Iran, geopolitics, and oil, they dominated the tape for so many weeks. Now it's, what, it's kind of old news and we're focused on earnings?
Yes, exactly what it is, and that's a good thing. I think we've been focused on earnings for a while already. That's why with this news coming out, we're not up 1,000 because we've been up 2,000 over the last 2 or 3 weeks. They started buying this market in anticipation of this kind of news. Now, when we really have a complete ceasefire, I think that the slingshot is going to go, and we should probably go higher a little more aggressively. But think, in a quiet way, we've literally been inching our way. That first breakthrough Friday when we got up to 7,100, when we had been negative for so long, was pivotal. And then we've been working our way up. Think about it. We were at 6,400 S&P. We're at 7,400 S&P. That's 1,000 points. That's huge. You know, and so while Dow hasn't participated, the other indexes have. The market is, it should be focusing on earnings. That's the lifeblood of this market.
All right, Peter Einstein. Peter Tuchman, thank you for being here. Time for the closing bell. Fresh round of all-time highs. My special thanks there to Peter Tuchman, the Einstein of Wall Street, or apparently, as I like to call him, Peter Einstein, here to kick off the show. Your final tail of the tape on this history-setting Monday, May 11th. The S&P up, let's call it 0.2. The Dow 30 up 0.2. The New York Stock Exchange Composite Index in positive territory, about 0.1%. And the small caps, the best performing of the bunch, up 0.3% on a day. Also catching a bid, oil and energy stocks, most defense and aerospace names on the day, healthcare and biotech overall having a very strong tape as well. Honeywell, Nvidia, and Caterpillar are your 3 strongest performers in the Dow 30. Your Dow 30 laggards into the closing auction today. Nike, Disney, and IBM. All eyes, of course, on Disney's upfront scheduled for tomorrow. Energy, materials, and utilities, your best performing S&P 500 sectors today, and your sector laggards, staples, telecom, and consumer discretionary. Don't frequently see staples and discretionary moving the same way, especially not both moving down when the rest of the market reaches an all-time high. But let's get Michael Monahan's take on today's tape and much more. He joins us now, portfolio manager, founder at 100 ETF. It's great to see you.
Great to see you. Thanks for having us.
First, very broad strokes. I'm going to let you take this wherever you want. You get a look at the big board here. We started in negative territory. That did not last long. Buy-side pressure came in, another round of all-time highs. What do you see in these markets?
So we see 3 waves moving through the market. You have the macro with the Mideast instability. You have the CapEx build out with AI, and you have the job concerns. So you see those 3 waves moving through the market, and right now the concerns on Middle East instability and job losses seems to have abated. We saw the great job numbers last week. So what we're seeing is the follow through for the CapEx spend cycle.
When you talk about a bull market overall, you like to see your generals lead, you like to see big tech do very well. What do you see in terms of breadth, rotation? Are there other non-tech parts of the market that are giving you some optimism that they're also doing their fair share?
Yes, we're seeing strength across many sectors of the market. We're invested broadly across all parts of the economy, and we see strength across all of our names that we're currently invested in.
We got a high-stakes meeting this week on the geopolitics front. Peter Tuchman and I were just talking about how the concerns in Iran have been somewhat abated from investors, but now you got this can't-miss meeting between U.S. President Donald Trump and Xi Jinping of China. What are you watching for out of those geopolitical developments and things investors may pay attention to this week?
So we tend to take a very long-term view and try not to get bogged down by any one data point. We like to look at the mosaic of the way the market's moving. So we think that's an important meeting, but we don't think it's the only story of the market.
What is that mosaic? How would you describe the fabric of that mosaic to a would-be market participant right now?
So I think, as we mentioned before, we bring in a data point like that meeting in China, and also what's going on with oil prices and inflation, and compare that to the backdrop of these big build-outs within the AI CapEx spending cycle, and then also incorporate what's going on with jobs. So that's what we're watching within our mosaic.
Do you have concerns about the CapEx super cycle, the spending cycle, the hyperscalers right now? There's some concerns that maybe the valuations become a little bit more too stretched. Are they a little too far over their skis? How are you thinking about that question?
So we don't see that. We look at the payback cycles on some of this CapEx spend right now. It looks like a big data center has a 2 to 3 year payback, so we think those are very strong investments. And we don't think these stocks are expensive. You look at Meta, it's trading at a 0.6 peg right now. So we think there's good valuation opportunities in a lot of these hyperscalers.
Let me ask you about the Founder Factor ETF. This was really interesting. My producers and I were looking at this today. It's ticker symbol FFF. Among your top holdings, Oracle, NVIDIA, Palantir, Meta, Salesforce. I'm recognizing a pattern here. What should people know about the ETF and the companies who qualify?
So in the Founders 100 ETF, we own the 100 best publicly traded founder-led companies. The reason we focus on founders, if you look at founders over very long periods of time, those stocks tend to have 3 times the stock performance of a board-hired CEO. So we think it's a very efficacious way for us to invest on behalf of our investors to deliver the best possible risk-adjusted returns.
Before I let you go, any other top catalysts on your radar you are paying attention to that you think the average would-be investor at home might also benefit from paying closer attention to?
So we're very long-term. We encourage investors to think in long investment cycles and allow the power of compounding to help them with their investments. Focus on the long term and don't get bogged down on the short-term data points.
It's time in the markets, not time in the markets. I'm sure you've heard that before.
Absolutely right. We agree.
You're welcome back anytime. Michael Monahan, Portfolio Manager, Founder 100 ETF. Thanks a lot for being here. It's great to have you.
Thanks for having us.
Of course, Josh will grab your microphone. Howard, you and I will go this way. Here are some of the top analyst calls that moved the tape here on Wall Street this morning. We'll start with UBS analysts. They are downgrading Dell to a neutral, mainly on concerns over Dell's current slate of valuation. Dell shares up 93% so far here in 2026. That explains those valuation concerns. Next up, Piper Sandler reiterating Tesla as overweight, citing positive tailwinds for the upcoming few years. Shares are down about 6% so far year to date. Finally, JP Morgan downgrading Wendy's to underweight, citing too many negative catalysts in their estimation, including a pretty vague leadership picture at the top of Wendy's. Shares of Wendy's are down 14% since the start of 2026. Howard, we'll take a look at one New York Stock Exchange notable that calls the big board home. It's FedEx. Not a huge green tape, up 0.08% on the day, but B of A adding FedEx, the transport giant, to its US 1 list of top ideas. The stock has been in a huge uptrend as of late, up more than 30% from the start of the year and up more than 70% over the last 52 weeks. The average one-year price target for FedEx sits around $4.14 a share. That's upside potential off these current levels of about another 8%. Last week at Consensus 2026 down in the great city of Miami, Florida, FinTech TV lead anchor Remy Blair sat down with White House crypto advisor, the one and only Patrick Witt. What a great interview. They discussed the latest on the Clarity Act and much more. Take a look.
Welcome to FinTech TV. I'm Remy Blair. We're coming to you live from Consensus Miami 2026. Over 20,000 attendees have converged here at a critical inflection point for the global financial system. Now, right now, the U.S. is navigating a high-stakes legislative landscape regarding the future of digital assets. And Congress is working to pass the landmark Clarity Act, while policymakers carefully weigh the integration of stablecoins into the traditional financial system. Now, globally, the U.S. does face mounting pressure as adversaries as well as allies alike scramble to build the next gen of financial infrastructure. Well, at the center of this effort is our next guest, Patrick Witt, Executive Director of the President's Council of Advisors for Digital Assets at the White House. Patrick, welcome. Thank you so much for joining me.
Thank you for having me.
Well, we're here in Miami at Consensus 2026. There's traditional finance, there's decentralized finance, and there are policymakers as well as innovators, builders, and media on the ground. So give us your take on where we stand with the Clarity Act right now.
Well, we've made a tremendous amount of progress. Recently, we've had, I would say, a big breakthrough on a number of issues. Obviously, the stablecoin rewards yield language getting out there. Some of the work that we've done on the Blockchain Regulatory Certainty Act, working with Senator Grassley's staff and the Judiciary Committee, closing out those two issues were huge steps forward. So we're definitely trending in the right direction. I'm very optimistic about being able to mark up this bill next week, as you heard from Senator Moreno yesterday. Thursday is the day, and we're working behind the scenes to close out all the remaining issues, but we're looking good right now.
Yeah, and Patrick, it's very interesting to be at an event such as Consensus because there are so many players in the industry, traditional finance as well as decentralized finance and policymakers. A lot of legislative conversations taking place on the ground here. But as we look towards the future, we know that things have been changing in the digital asset space. So when it comes to the current administration, what is the thinking when it comes to Bitcoin in terms of a strategic asset?
Well, we talked about it a little bit out in Las Vegas. We will be making an announcement around the Strategic Bitcoin Reserve digital asset stockpile in the coming weeks. Obviously, the president signed the executive order last year, and that was really a starting gun for the agencies to go implement. We've continued to work diligently. My deputy, Harry Jung, has done an incredible job of leading that interagency effort in order to get this on solid footing. And we'll be rolling out some announcements with that, but properly safeguarding these assets, making sure that the United States leads on Bitcoin and other critical assets and starts to view these in the same way that we would view gold or that we treat our own currency. It's critically important for our national security. I think President Trump was really the first one to come along and say that economic security, a lot of the issues in that space are issues of national security. One of the pillars that underwrites American hegemony around the world, in addition to our military and our judicial system, is our place in global financial markets. And so these assets are the new infrastructure, the new architecture of the financial future. And we need to be leading on these and thinking very, very forward in terms of how we're approaching these assets.
And Patrick, it is May 2026. We continue to monitor the situation in the Middle East. And when we're talking about digital assets, in particular, crypto assets, as well as stablecoins, I think the conflict in the Middle East has really highlighted some of the opportunities as well as risks. So what has the geopolitical conflict informed you about where we stand in terms of digital assets?
Well, I think it's part of our closing argument as we look to mark up this bill and bring it to the Senate floor. Is we're obviously very focused on the minutia right now, these little details and somewhat the trivia. We're in the weeds on a lot of these issues, but we're encouraging all the senators to remember why we're doing this in the first place. This is about U.S. leadership on the new digital asset, future that we're entering into. And if we don't lead on this issue, we're going to be following somebody else's rule book, and it's probably going to be a rule book that's set by potentially our geopolitical competitor in China. So we need to remember why we're doing this. This is about stepping up. This is about America leading. And there are so many different jurisdictions, central banks, countries around the world that are waiting on pins and needles to see what the United States does to regulate this asset class and to conform the regimes and the frameworks that they put in place and follow our lead. So it's a pivotal moment right now. There's a huge opportunity in front of us, and we need to seize the moment.
Well, Patrick, I really appreciate your time. I know you have a busy schedule here in Consensus 2026 in Miami. So thank you so much for sharing your perspective, and thank you so much for all of your insights.
Thank you.
Stand by. Welcome back to the show. You're watching Taking Stock live from the iconic trading floor of the New York Stock Exchange. Our next guest joins us now. Say hello to Bob Day, Executive VP and CFO at Darling Ingredients. Nice to see you, and thanks for taking some time for us today.
Absolutely. Thanks for the opportunity.
And also, you and I are standing here up 1.1% on the day. Great stock, great tape today. Talk to me about Investor Day and what brings you and your team down here to not just visit us, but ring the closing bell.
Look, it's been quite a few years since Darling had an Investor Day. As everyone knows, we went through the COVID era. We've waited a long time for the Renewable Fuel Standard RVO policy, and really now that everything is in place, we felt like it was the right time to talk about the company.
So talk to me a little bit more about the company, some of the ways you're turning agricultural waste into profitable products. What does that process actually look like for you?
Yeah, so we are the largest company in the world that collects, produces, and adds value to animal byproducts and used cooking oil. There's over 100 million metric tons globally of animal products, animal byproducts that we don't consume as humans, and that product would have released a lot of biomethane into the atmosphere. We take those products and we add value in the form of proteins that go into animal feed and pet food, collagen that goes into human consumption and nutraceuticals, and fats that go into making renewable diesel and sustainable aviation fuel.
And I know you're not doing this alone. You got a lot of exciting joint ventures. One of them is with Valero. You call it your Diamond Green Diesel. What is it all about, and why do you think it's such a big opportunity?
Well, Diamond Green Diesel is a flagship position for Darling. We own 50% of that with Valero, as you said. It is the largest producer of advanced biofuels in the United States, and over the last 3 years, the largest producer in the world. Diamond Green Diesel is extremely well positioned to provide alternative fuel supplies to the United States market and globally. Certainly at a time like today, that supply is very meaningful as supply is a bit constrained. We're really excited about the future because of our ability to repurpose ingredients that otherwise wouldn't have a home. And markets are quite high right now, so we're excited about that.
Well, overall, the stock market's at all-time highs. I imagine a lot of bullish enthusiasm for the space that you're in, and the fact that you're dual listed, not just here at the stock exchange, but NYSE Texas as well. Why did that move strategically make sense for you and the firm?
Well, we're based in Texas. We're headquartered in Irving. We're really a big believer in the Texas growth. So much is happening in the state. We want to be supportive, and we're happy to be part of the momentum.
Are you a Dallas Cowboys fan by chance?
I'm a Minnesota Viking fan, but I'll support the Cowboys as a Darling representative.
That's all right. We love Jerry Jones. I'm a big Giants fan, so I prefer you're a Vikings fan. Where does the next phase of global growth actually come from? It's one thing to do the business today, but your projections and optimism for where we go from here.
We tend to follow the growth in animal production. If you look at what's happening with poultry in the United States, beef and poultry in South America, what's going on in Asia, we've got a lot of growth opportunities. We're going to continue to see growth in animal byproducts. In addition, in the collagen space, it's a growing category, really exciting. We're the most innovative company in the world that are bringing a lot of solutions to personal health. And we're going to be really focused on growth in those areas.
What is one reality of the space of sustainable ingredients, general food waste recycling that would surprise the average American at home? Maybe if it's an issue they don't spend a ton of time necessarily thinking about.
I think what would surprise people is how efficient we are, certainly in the United States, but also increasingly globally at recycling that. These are products that have a really high nutritional value or a high fuel value, and the world and the market has become very efficient at repurposing those things, and we're committed to doing that as a company.
All right, Bob Day, Executive VP and CFO at Darling Ingredients, ticker symbol DAR, up 1.1% on the day. Congratulations, and thanks for being here.
Thanks for the opportunity.
All right, we'll be back with more Taking Stock live from the trading floor of the NYSE coming up right after this. There they are. Well done. Welcome back to the show. Olzhas Amirov joins us now down here on the trading floor. He is the Business Development Director at Energix Global. Really nice to see you. Thanks for taking some time for us today.
Thank you, JD. Thank you for the invitation.
So please correct me if my understanding of the timeline is a bit incorrect. You started foremost in Bitcoin mining, but as we're seeing AI demand continue to explode globally, what's your focus now?
Yeah, that's exactly the story. So we started as a Bitcoin mining back in 2017 and right now transitioning into AI. Of course, Bitcoin mining is still the business where we operate, but long-term growth is, and the goal is AI data factory.
What writing were you seeing on the wall in the AI data factory space? What changes in the evolution did you see happening that gave colleagues confidence now is the time for you to pivot?
Well, for the last, I believe, 2 years, we saw a lot of demand. It was a lot about the speed, and company was just trying to enter somehow the deal into AI space. But what's our belief? It's since we everything is developing, it's more and more about the cost and the return on investments. And what we do believe is return on investments and controlling your cost is the most important part. So that's why we enter the market right now with our own generation. So we do believe with having your own generation, you can achieve the best performance in the market.
I gotta say, it's a bit of a surprise to me, but let me ask you a bit about your work in Alberta. Why is that so attractive for energy-intensive industries overall?
Well, thank you. That's exactly the case. The Alberta is a very rich market with the gas. There's just a lot of gas available. We believe we can go gigawatt plus, and the production cost of these gas is very low. So we do believe that we can develop behind the meter model where we have our own generation and can develop as an independent power producer with the gas in place, with the generation in place, and the
capacity overall, and there's no shortage of demand, a hunger and appetite to try and compete for that otherwise pretty limited capacity. How does that underscore vertical power integration in terms of where you're positioned and how you think about that challenge?
Yeah, so we basically believe that the future for the data center is bringing your own power or generating your own power. And that's where we start. While the data center infrastructure is something that you need to change once in 3 or 5 years, the power generation is something that's going to be in place and going to run for more than 20 years. And that's the story we do believe is like a fundamental, it's layer one of the operations.
Correct me, do I have this correct, a 1 gigawatt build out? I mean, that's essentially what you're looking at. Where are you in that process currently?
So how it works right now, we're originally from Kazakhstan, where we do have more than 250 megawatts of operations already. And in terms of Canada, we recently acquired an oil and gas operator and recently received the energy generation license. So we're going to build out soon.
What should people know about Kazakhstan as a would-be Bitcoin mining hub as well? That might come as a bit of a surprise for a lot of our viewers.
Yeah, thank you for asking. I believe it's much better placed for investments than usually people think because of very good relations with many governments and, how to say, very good energy rates for the AI data center business especially.
And before I let you go, overall, you see AI demand as a structural tailwind to you in the operation these days? There's no shortage of exciting conversation in the space.
Yeah, actually, although there might be some bubble like in every industry, we do believe that long term the demand is just huge. And I believe we're just starting with the chatbots, but further when we're going to full self-driving cars and all these technologies, it's going to be like a massive demand.
Olzhas Amirov, Business Development Director at Energix Global. Thanks a lot for being here and making the case. You're welcome back on the show anytime.
Woo! Thank you.
Very well done. Don't go anywhere. A lot more Taking Stock coming up live after this.
Yeah, woo!
Welcome back to the show. Time now for the latest headlines in the world of fintech, crypto, and artificial intelligence for your Monday afternoon. First up at this hour, the crypto majors are in mixed position. Bitcoin and ETH are both down. Solana's up about 5%. Next up, global crypto investment funds pulling in nearly $858 million just last week alone, the most since April, as Bitcoin climbed back above 80,000 for the first time in several months, and the Clarity Act optimism continues to grow. And finally, Panthalassa, it's a startup developing wave-powered seawater-cooled data centers, set to raise $140 million at a $1 billion valuation. They really do think of everything. And now Money 2020's very own Scarlett Sieber is back to explain all of the ways that fintech companies really make money. Take a look.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money. Today we're going to be talking about insurance, but stay with me because this one is really about trust. Meet Plum Insurance. Plum provides health insurance and benefits for employers with technology designed around claims. The moment insurance usually fails people. So how does Plum actually make money? First, insurance commissions from policies sold. Second, platform fees from employers. Third, margin on benefits administration and add-on services. And fourth, automation-driven efficiency, which improves profitability over time. Here's the difference. Most insurtechs sell policies. Plum fixes what happens after something goes wrong. Let's do a momentum check here for a second. Plum's Series B in Q1 of 26 came after reaching profitability, that golden place. Still rare in insurtech, by the way. So what is Plum's mode exactly? Retention through experience. If claims work well, customers stay. And that's how Plum Insurance actually makes money, by fixing the moment insurance usually breaks and turning trust into long-term revenue. In a category built on fine print, trust turns out to be a very good thing for business. Have a company that you want us to feature? Drop it in the comments below and it just might make that cut. In the meantime, back over to you.
Tomorrow morning here on Wall Street, 1 hour before the opening auction and opening bell, we will get the latest April CPI inflation print. Wall Street economists are expecting to see core CPI rise 0.4% month over month and 3.8% of an increase year over year. We also have lots of quarterly results for investors to digest before the open tomorrow. That includes the latest results from D-Wave Quantum, On Holdings, and my favorite name of a company, JD.com. This time tomorrow after the close, the latest numbers from Oklo and Karman Space and Defense. Your final tail of the tape for another round of all-time highs for the S&P 500 of 0.2%. The NASDAQ in record-setting territory, while the Dow, the NYSE Composite Index, and the small caps all in the green as well. Thanks for watching today's edition of Taking Stock. We'll see you again tomorrow from the big board.